Hello, and welcome to this session on trading breakouts that can produce big moves. Today is Thursday, October 13th, 2011. Thank you for joining us today. This is Darrell, your host. In just a moment, we'll be joined by Darrell Jobman, a senior analyst for TraderPlanet.com. The information conveyed in today's presentation is for informational purposes only. It is not a recommendation to buy or sell any trading instrument, and the opinions given by our presenter may change without notice at any time. Please also be aware that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and will be emailed to you, so you will be able to review this material again at your convenience. If you're new to attending Trader Planet webcasts, you'll be pleased to know that we have previously recorded sessions on our site at www.TraderPlanet.com. As an interactive event, Darrell will invite your questions at the conclusion of his lecture. Your questions let Darrell know if he's been effective with the discussion and helps as he prepares future presentations, so we hope you'll help him out by sending in some great questions. Simply type your questions within the Q&A frame on the lower right-hand corner of your screen, and we'll stage the questions for Darrell to answer. As one of our more revered market analysts, Darrell Jobman trades his own personal account and has been involved in the financial markets for over 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor and editor of several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and courses on trading. Darrell enjoys helping others succeed by teaching the do's and don'ts of trading, so if you're in need of his help, you'll benefit from his editorial contributions on TraderPlanet.com. It's now my pleasure to introduce the senior analyst for TraderPlanet.com and our good friend, Darrell Jobman.
Thank you, Darla. Thank you for that introduction to today's webinar. First of all, we do need to cover a couple of household type items. The first is that we will be using the Vantage Point charts when we get to the charts and talking about the current market situation. Also, we have a sponsor, Wassendorf and Associates, which is the publisher, of course, of SFO and has Traders Press and other information available. When you put those together with the TraderPlanet.com website, you have plenty of resources for education, information, for traders to access. Also, as Darla mentioned, if you do have questions, there is a box so that you can enter the questions, and we'll take care of those at the end of the session. And when we do get to those charts, you may want to go to full screen mode so you can see the detail a little bit more clearly. Well, today's topic we're going to be talking about will be the breakout type of trading, where something occurs, something breaks out and gives us a signal, a clue that something is about to happen. We don't know if it's going to be a trend. We don't know if it's just more sideways. We have to react to whatever the market happens to give us. Excuse me. In a lot of ways, when you set up for the breakout, as a style of trading, it's a lot like looking for the intraday trading strategy that we have covered in previous webinars, where in that case the prices are expected to stay within the boundaries. In the breakout case, we're looking for them to break out in the situation, out of the channeling situation. We're looking for a change in the kind of the momentum. We're looking for something of a ranging channel situation nature that we can then make a play on as the market moves out of there. And you have to look at what is the market doing that is going to cause that something different that is going to make that move possible. Well, we know that previous highs and lows are pretty much good spots to look for ranging channeling type action. Markets tend to respect those highs and lows, those lines, and if they break through, then that suggests something different about the prices. But they have to be overcome. Until they are strong obstacles, and when they are penetrated, then we have to think about the new possibility of where the market will go. When you get into markets, sometimes the market just gets carried away with itself. It gets a little bit overbought, oversold. A lot of indicators have threshold limits at which they will suggest that this is a time when the market may be ready to turn. Simply a matter of a market maybe even getting a little tired or exhausted after stretching to the limits that the buyers or sellers want to take the price to. And it's kind of that, there's an equilibrium point, and then there's a mark beyond which it tends not to want to go unless there's some surprise, some significant new development. And sometimes the market just turns on its own will because it runs out of new buyers or new sellers. You may be able to tell something like the commitment to traders reports when it has reached those limits, or you look at open interest and see when it's gotten unusually high. It may be just kind of a situation, for lack of anything better to do, it just breaks out, breaks down, breaks up, whichever way it was going, and starts a new trend or a sideways market. Now, the things that can start a new breakout, new situation, of course, the catalyst can often be, the price action itself, just getting out of there, and once it breaks something, you get a lot of people that have stops. You get a lot of different type of market reactions that will carry the market further than it ought to go. Maybe there's a surprise news development. Maybe there's some unexpected change in supply or demand fundamentals. Maybe the investor sentiment has changed completely. We may not know why. It may not even be obvious, but when it happens, we need to be alert to those kind of clues. And when we are prepared, we need to have an action strategy. When we have a kind of what you might call a battle plan ready to act, it has to be ready to go when the conditions arise, when we can look at a chart and we can say, okay, this is a point at which I need to do something. Now what do I do? And I need to have a strategy pretty much lined up where I can trade that initial breakout. There's also the possibility we might let that breakout occur as you have some event trading type of approach to the markets where the market overreacts and they move to some extreme, and then the market kind of, it's like a rubber band, moves back. That's another type of a, kind of a repercussion or a result of the breakout type of trading strategy. Of course, you always have to be aware that the breakout doesn't turn out to be a breakout. Maybe it's just a jab or a spike or some kind of fake out that tries to trap the traders, and so you have to have, any plan has to have a plan for failure as well as for success to keep risk at a tolerable level. So when will that next breakout occur? How will it unfold? Obviously, it's hard to tell by fundamentals because you don't know what the surprise news or event or report will be, and even if you did have that knowledge, you don't know how traders are going to interpret the new development and what value they might place on the new status situation. I read a quote, it was actually on Robert Colby's column on TraderPlanet.com today, and it kind of applies to the market situation today and the way things are going, so I'll just read it to you briefly. The financial markets have become driven by politics. It is central banks printing money or governments bailing out banks that determines whether asset prices rise or fall. While a few clever people can predict trends in free markets,